Japan wholesale inflation eases in October. Japan's wholesale inflation slowed in October, signaling a cooling trend in producer prices amid a stronger yen and moderating global commodity costs. The Corporate Goods Price Index (CGPI), which measures prices of goods traded between companies, rose to 0.7% year-on-year, down from the 0.8% in September, according to data released by the Bank of Japan (BOJ). The reading exceeded market expectations of a 2.5% increase. The deceleration was largely driven by a sharper decline in import prices, which fell 1.5% on a yen basis, worse than the 1.1% drop recorded in September. A firmer yen reduced the cost of imported raw materials, including energy and metals, putting downward pressure on wholesale inflation. The CGPI is a key leading indicator for consumer inflation, closely monitored by the BOJ as it calibrates monetary policy. Japan has maintained consumer inflation above the central bank's 2% target for over 3 years, prompting the BOJ to end its ultra-loose stimulus framework last year and raise its policy rate to 0.5% in January. Despite sustained price pressures, BOJ Governor Kazuo Ueda has emphasized caution, stressing the need for inflation to be driven by domestic demand rather than external cost push factors. The latest wholesale data suggests imported inflation is waning, potentially giving the central bank room to assess wage growth and consumption before further tightening. Analysts view the slowdown as consistent with global disinflation trends. The risks from potential U.S. trade policies and currency volatility remain. For now, Japan's producers face a more benign cost environment, which could ease margin pressures in the coming months.